Hello and welcome. You're watching Business Today Television. I'm Sakshi Batra and this is Market Today, a show where we'll help you understand the trading setup as well as the market strategies for the day. Well, the benchmark index Nifty declined for the second consecutive day yesterday, and that was being seen on the pressure, being seen on the IT stocks. This was largely being weighed down by the weak global cues after Moody's ratings downgraded the US government's credit rating from the top tier. Now, what we've also seen is that the Nifty failed to hold 25,000 for the second day in a row, eventually marking an end, ending about 74 points lower in trade. Mirroring Friday's trends, the technology stocks definitely bore the brunt of the selling pressure, but it was the defense stocks that were higher. We already have the pre-open rates, 24,463, 471 points lower, but this is something that should definitely improve because the GIFT Nifty was indicating a gap up start for the day. It's really not as in sync with what was being indicated by the GIFT Nifty at this point in time, 1.6% lower at this point in time, but this should definitely drastically improve for the better as we inch closer to 908. Now remember, as of yesterday, we did see the defense spotlight continuing all through last week and even yesterday, although there was a tad bit of profit booking. Remember, the gains of almost as high as 40% have been witnessed over the last week of gains for the defense names. Apart from this, in individual stocks, it was Vodafone Idea that slipped by 8% after Supreme Court dismissed the company's writ petition seeking urgent relief on the adjusted gross revenue dues. Now, after that, the stock was definitely down in trade. Now, as for today, the Union Commerce Minister Piyush Goyal is currently in the US, so it will be important to see how the developments will be seen on the US-India trade agreement front, and any cues from that will be extremely important for us to really track. As you see, we're now improving from the deepest lows that we hit at the pre-open. Now we are down 200 points and this should also improve for the better. Remember, slowly and gradually the markets have been inching higher. It remains to be seen whether the earlier high of 25,116 will be able to cross, and only then we can see higher highs being seen on the markets. Now, as of overnight, Wall Street finished higher. S&P 500 added about 0.09% in trade. With that, it is on the sixth straight day of gain as far as the Wall Street is also concerned. Dow Jones and the Nasdaq also rebounded in trade. This morning, we are seeing Asia Pacific stocks rise as investors are assessing China's latest loan prime rate update as well, while awaiting the RBI's Reserve Bank of Australia's rate decision as well. So Nikkei was up by about 1%. You can see the topics rose by about 0.7% in the early trading session. Kospi adding about 0.3% in trade. The ASX 200 advancing by 0.7%. So the cues are positive, and you're seeing drastic improvement, like I mentioned, on the Nifty front as well. Now just 71 points lower, 24,872 at this point in time. So let's see how this really pans out in trade. Remember, as far as the flows are concerned, FIs and DIs both were net sellers in the equity markets as of yesterday, even though the quantum was much less. But in May so far, both FIs and DIs together have bought Indian equities worth over 47,000 crore rupees as well, so supporting the market sentiment. But yesterday's figure for FIs was a sell of 526 crores. For DIs, it was 237 odd crore rupees as well. We'll also keep an eye out on a whole host of stocks. But before that, let me welcome our guest on board, Mr. Dharmesh Kant, Head of Equity Research at Chola Securities. He's joining in on the program with us. Warm welcome to you, sir, and thank you so much for taking the time out for this discussion. I want to first begin by understanding from you. Yesterday, the sentiment, kind of got impacted because of the downgrade on the US markets, especially for the IT sector, is where we saw the selling pressure emerge. What exactly do you foresee, sir? It was erstwhile the trade tariff impact that was being seen as a key knee-jerk. With this fresh downgrade coming in on the US markets, do you think our a bet on IT stocks will again have to be rethought?
Yeah, good morning, Sakshi, and good morning to all of you. See, this downgrade was, coming because only Moody's was the one who is not downgraded. Other two have done. So it was a matter of time, and rating agencies are always, behind the curve. So they did it. I think the more to do was, after the analysts recalculated and arrived at the effective tariff rate which will be in place, it would be around 39% on the US, Chinese goods by US, which earlier, before this entire thing started, it was 11%. So nonetheless, 28, 27% would be a hike in the tax rates, so which will increase the cost for the consumer. So that has to be discounted, and to start and stop has been so frequent that the actual impact to analyze will take 3 to 4 months when it stock up of inventory and then draw down on inventory and then reordering and everything will take place. Till that time, to my mind, I mean discretionary spending and incremental spending on IT will be on hold. Anyways, Indian IT space was struggling with the transition from normal software to AI driven software. So I think by that time they will also get enough elbow room to be ready with the products to offer to the market when things are conducive and more stable. And that is what has led to the selling pressure. Though I don't think the downside is more from here. I mean they are near the bottom IT stocks.
Okay, got that. But let's actually discuss the trade talks and how they may progress. I was mentioning in my comments that Piyush Goyal is in the US, and the statement that he put out on Twitter about 8 hours ago was that he had good discussions with Secretary Howard Lutnick towards expediting the first tranche of India-US bilateral trade agreement. How would you really see this, especially so far the statements that have come in from the US have not been very encouraging when it comes to India and the trade talk. But finally we are seeing that Mr. Piyush Goyal is there and is finally being able to steer something in India's favor when it comes to US-India trade ties. What is your expectation on that front? Already UK and China have seen some sort of a deal being struck with the US as far as the trade talks are concerned. What about India, sir?
Sakshi, I mean, it's very clear. You have to give in. Uh, how much you are giving in is the thing to be, known. And this negotiation will definitely go in favor of US. So when I'm saying will go in favor of US, I mean whatever is was the status right now. The new status will be, in favor of them. Whether it will be some goods where you are levying less tariff on imports and your exports are getting a higher taxation, though not to the extent which was earlier envisaged because of all these, new set of patterns which is emerging. So give and take, our cost will go up when we are, exporting to US. And that's how much it will go up has to be seen. And imports will be, cheaper to India. So consumer, it's a delight for them. You will have variety of multi-country options at a very, affordable prices. Domestic, I don't think the type of goods which comes from US to India is going to create a dent into the domestic economy. The only dent which it will create is what we are exporting to them, how much more we have to pay, and that will hit on the profitabilities to some extent. So that has to be seen. To my mind, the only silver lining is that once this is settled, at least you have a yardstick and clear measurement to value the company and go for the future growth. So that would be the sooner it is done, the better it is for the markets.
Okay. Let's also focus on the FII flows, sir. So far in May, it's been rather positive with
Yeah.
the kind of, inputs that we have seen from the FIIs. Together with the DIIs, they've bought 47,000 odd crore rupees in the Indian markets. The question is, will this continue, and what are the factors on which it will depend, how the flows will be steered, sir?
So, I mean, April, there was some doubt on whether it is only hot money which is chasing the market as a trading bet. But May data does suggest that some stability is there in this. This is a stickier money which is coming in. And look at the macros. I mean, all the clouds have dissipated and it's a clear sunshine right now on the macro front. So first thing is, tax benefits are coming in. So consumption is likely to take a upswing. At the same time, interest rates have fallen down. Inflation has fallen down, giving RBI elbow room to maybe go for another cut in this June policy. Monsoons are advanced. I mean, they are arriving 3 or 4 days early as per IMD prediction. And out of last 10 years, 9 times they have been correct on the prediction. So that's another favorable data. And at the same time, if you see this all tariff saga with the UK, China, and now with India getting settled down, so clarity is emerging on the business front. So all these macro factors are doing well. Just to highlight that Q4 earnings, though divergent in many ways, but still it is better than what the expectation was. I personally went with a 4 to 5% kind of earnings growth for entire financial year FY 25 for Nifty 50. Even if you strip Bharti Airtel 30,000 odd crores of profit from that, even on the pro forma basis, it's 9.5 to 10%, which is far better than what my judgment was there. So that will also play out. So it's a buy market. From any correction from here on should be bought into unless something out of, I mean, if a war happens, then we don't know. But that is very unlikely right now. So
Yeah.
you have to be stock picker and a sector picker.
You have to be a stock picker and a sector picker at this point in time. This is a market where you should be looking at opportunities to buy into the market. And as we see settling down of levels on the Nifty as far as the pre-open trade is concerned, you do have some signs of green emerging yet again. 24,996. Remember, the GIFT Nifty had indicated 100 point of a gap up start. At least we've settled 50 points on the positive side, and not like how the first opening tick off pre-open was, which is why I thought that things will improve for the better, and that's how it has turned out to be. Let's look at the key sectors and the stocks that are holding up. Real estate after yesterday's move is also looking up again in trade today, 1.5% higher. Metals could also see some short covering, 0.8% higher. PSU banks continuing with their momentum yesterday, looks to be up and about. Even IT, I'm going to be keeping a keen eye out on after yesterday's drubbing. Will there be some kind of a short covering rally as well? So we'll keep an eye out on that. So far, it seems that all the sectors may be opening a higher in trade. On the stocks front, BEL and HAL will again be in focus from the defense space. BEL seems to be opening higher. You also have the metal stocks, Hindalco, JSW Steel opening higher in trade. We'll also look at how railways and defense, both of them move in trade today. Let's discuss this one now with Dharmeshji. Dharmeshji, first let's discuss defense. With the kind of sharp rally that we've seen unfold over the last 1 week, gains of up to 40% have been seen over the last couple of sessions, for many of the stocks. But are they now, getting again into a dicey zone at this point in time? Or do you think there are further more legs? Because of course there is replenishment kind of a news that's supporting the sentiments at this point in time. More orders that will be coming in, and the government and the DAC has already given a free hand for any kind of replenishment, and therefore we've been seeing also earnings, for instance, for Premier Explosive, for Zentech, that have come in supportive as well. How would you look at the defense space at this point in time? What are you advising?
So actually, even BEL earning was very good if you look at the numbers
Yeah.
on a year-on-year, on a quarterly basis, with the improvement in margin from 27 to 31%. It's a great improvement because of the transition into the product profile. And so will be the case with all the defense companies. Good news flows throughout the year. You will keep on hearing with order wins, and the quality of order wins will be more of a product base, which will be highly margin accretive. In the short term, trading profits may come in and go, that can happen. But defense, if you are playing from say 3 to 5 years perspective, it's a doubler even from here. The type of order book they are sitting on, even if they execute that, I mean, easily they are going to double from here, all the companies, I mean, in the basket. So that is my sense, and still we are heavily dependent on imports of the higher technology of defense equipment are concerned. So like S-400 is a Russian make, why can't you make it in India? So eventually that is going to happen. So, I mean, the opportunity is humongous. Trading perspective, one may, see some sideways kind of a movement of consolidation near term, but you should be holding it in your portfolio and continue holding it for greater benefits in a long term.
Okay. So even yesterday we did see that the railway stocks came back into the spotlight. I think all of May, many of the stocks have actually moved up about up to 30 odd% as well. How would you look at railways, which were rather keeping it low, despite the strong defense move that we have seen over the last 1 month?
Yeah, I think the texture of the market right now is where there can be, clear visibility as to the top line and bottom line kind of a growth, with where government is the spender where. And in that context, after defense, even railway falls into the same bracket because entire railway expenditure is through the union budget. So, and last year it was a bit of a lackluster. There was no incremental increase in budget as well. This year, I think with the railway minister has been sounding quite positive, and some backlog of last year may pile on into this year in the profitability order book. At the same time, see from where they have corrected. I mean, they are still 40-50% down for them, or all-time highs, most of the railway companies. And that's the reason why we are seeing some traction. It's more of a tactical buying which is happening as of now, even from investment perspective. But again, if you're a long-term holder, as we say, 3 to 5 years kind of horizon, they are good bets. And the top pick, to my mind, in the entire railway space is Elcon International, where valuations are much comfortable if you compare that to, say, a Railtel or RVNL and the likes.
Okay, got that. We also have Mr. Arpit Beriwal joining in, analyst of derivatives wealth management at Motilal Oswal Financial Services. He's with us. Warm welcome to you, Arpit. Good to have you with us. A minute remaining for the markets to open. Go on with your choice on the Nifty Bank as well as top stocks.
Morning to all. So, if we see starting with the index, the headline index, if we talk about Nifty first, so Nifty, if we see the bigger trend of the market is intact from last 3 to 4 weeks, Nifty is forming high lows. That clearly indicates that the buy on dip structure is intact. Technically, if we see on the daily scale, Nifty is consolidating around 25,000 from last couple of sessions because last week we have seen a stupendous rally from 24,000 to almost 25,000 levels, and now generally after a big rally, market tends to consolidate. So overall, on the multi-time frame analysis, the bias is positive. On the immediate basis, the base of the market has shifted higher. Now immediate support for Nifty is around 24,750, 24,800 levels. That is the major support zone. On the upside, 25,200 and then potentially 25,400 would be the target that we are looking out for. Within that, stock specific action is likely to continue. Now talk about Bank Nifty. So Bank Nifty, if we see overall, this series has been quite a dull, but the bigger trend of the Bank Nifty is intact on the monthly scale, and it has been a star outperformer in the series of March and April, forming high lows on the monthly scale. If you talk about the weekly scale, consolidating between from last 4 weeks in a range between 55,000 on the downside, whereas on the upside 56,000 is the hurdle. So overall, within the banking space, our bias is positive till Bank Nifty holds above 55,000 on the spot levels for an upside move towards 56,000 and 56,250. Now talking about the stock specific, definitely the broader market is doing really well, and we have seen a very stock sector specific action rather than an index specific action. So there are a couple of ideas that are on radar. First would be from the reality pack itself. If you see reality stocks has done really a good pullback we have seen from the lower levels, and if we see the chart setup wise from the chart wise immediately macro tech, that is Loda, is looking quite promising on the chart. So from the weekly and the monthly scale, Loda has given a range breakout above 1385, 1390 levels. From last 3 to 4 sessions is forming higher highs, higher lows. So from here on also we can expect good 4 to 5% rally towards 1450, 1460
Sure.
level. Whereas on the downside, support would be around 1380 levels.
Okay. Markets have opened higher, and that's a breather. You do see 24,980 in front of you, but we also briefly hit that 25,000 mark, and we are now hovering around it. Both the front lines as well as the broader markets are higher in trade. But quickly, we have seen some of the sectors give up those early tick gains. Realty is now down 0.25%. You have pharma that's down about 0.05%. Autos down 0.09%. So just minor losses on all of them. But IT is seeing a very smart recovery, a short covering that is happening. 0.8% higher in trade. PSU banks about 0.5%. Oil and gas also higher. These are the pockets that are holding up, and metals 1% higher. Remember, these are the pockets that we will be focusing on. On the Nifty also, Hindalco is the top mover right now. Tata Steel, Coal India, Infosys, remain as the top movers. Whereas on the downside, Power Grid, post earnings, Shriram Finance also down in trade. Bajaj Auto, after yesterday's strong move, seeing some profits being taken off. Cipla, Titan Company remain as the top laggards at this point in time. India VIX, although is down 0.5%, still there is some pressure on most pockets of the markets at this point in time. In F&O, you have ICICI Lombard that's pulling up as the top moving stock, whereas Ashok Leyland, Torrent Power, FSN E-commerce, that's Nykaa, that's also pulling up. On the downside, you have Petronet LNG, you have Power Grid, Titagarh Rail and Max Healthcare as those which are under pressure. Let's look at the defense names, HAL, BEL. Let's also pull up some of these names within the shipbuilders as well. Remember, this is the pocket that did see slight sign of profit booking, and that continues. So you're seeing HAL now 1.6% lower at 49.32, and similarly, even for when we see BEL, it's just 1/4% higher in trade, 365 at this point in time. Strong movers in the early morning trading session within the IT and the specialized IT space. Midcap names, Reddington is up by about 8 odd percent. That's the one that's moving up smartly. Let's also pull up some other names in the broadest index. I think one of the recently listed stocks, Capstan Services, is at a 20% circuit. You also have names like Alkali Metals that's at a 20% circuit right now. Then Pfizer is something that's moving up, 9% high in trade among those strong moves. Zen Technologies, after yesterday's 5% circuit, you have another circuit of 5% today. Kitex Garments, that textile move continues from yesterday. Remember, CRM, Silks, Kitex, Raymond, all of them were up and about in trade. That continues. Kitex is now up 5% again. Then you also have names like Bas of India, Moltech Packaging. These are the stocks that are actually doing very well in the broadest index right now. Okay, let's go to our conversation with Dharmesh ji, include him there. Dharmesh ji, how about the metal space? That's the one that is shining the brightest today. 1% higher, names like Hindalco, JSW Steel, Tata Steel, all up and about. What's happening here, sir, and what's your fresh approach?
Yeah, I mean, a couple of macro data points which is driving the metal space today and coming from the China itself. So the industrial production in China for the month of April went up by 6.1%. Expectation was 5.5%. And this is coming on the backdrop of 7.7%, uptick in the month of March. At the same time, the retail sales was up around 5.1%, and China has come out with interest rate cuts, 10 basis point on both 1 year LPR and
Correct.
3 year. So, I mean, that is helping the pause. And the economy, I mean, GDP growth of China was 5.5%, much higher than what the expectation was. So, on this backdrop, metals have been, seeing a spurt again. With tariff trade and everything getting settled down, this will again push up the economic activity. And across the board, all central banks are on the interest rate cutting spree. I mean, US should also be in a corner to cut the interest rate. So it's clearly a sector to buy and hold. And again, as I said, corrections in these counters should be used as a buying opportunity. And a topic out there is Hindalco to for us, and we have been, recommending this stock for quite some time.
Okay, got that. Let's also get in Arpit. Arpit, in the opening, any key stocks that have stood out that you'd like to mark?
So if we've seen overall a lot of stocks open on gap up note, but since then you have seen some cooler from the high levels. But if you look particularly in midcap IT, that is where we can see some outperformance, and within that persistent, if we see the chart setup wise, monthly scale is quite strong. It gave a range breakout above 5500 levels on the monthly scale. Weekly scale, some pause was there, but on today again after some cool off from the higher levels, it has negated the formation of lower highs after almost 5 sessions, given a range break of about 5700 levels. So I think from here on we can definitely see a move towards 58, 50, 5900 levels. So I think persistent would be the counter that would be on radar, with major support around 5650 for an upside move towards 5900 levels.
Okay, Dharmesh ji, across the defense names, there is some profit booking. Paras Defense down 5%. We are also seeing Cochin Shipyard down 3%. Idea Forge down 4%. Garden Reach Shipbuilders also about 3.5-4% down in trade. So after yesterday's some profit booking, we are seeing that continue even in trade today. What's the fresh advice for those who maybe have missed this fresh bout of momentum? Is this an opportunity to buy, or do you think a large momentum or a large positive has already been priced in and therefore we see limited upside?
So I don't think there's a limited upside. Maybe in the near term, there's a limited upside. But if you are looking even for the medium term, maybe 6 months perspective, good amount of money can still be made if you are using this declines as an opportunity to buy. But the only advice would be don't go all out, go in a structured SIP kind of a
Correct.
manner. And 30%, I mean, one third, one third, one third you can do. Even if the stock starts building up, you add one third more. You're on a more clear water than, a shakier environment. So use as a SIP method for buying any quality companies from here on. The markets are already, hitting up towards all-time high. So one has to be a bit mindful of that fact.
Okay, fair point. That's something that we'll keep an eye out on. Arpit, anything in the F&O space that you'd like to mark? What catches your attention here? I can see ICICI Lombard, Torrent Power, Nykaa, Coforge, all of them up and about. Anything that strikes your attention here?
So if you see over the metal stocks, we have seen good momentum since morning and it's holding well. And within that, if you see the particular chart of structure of Jindal Steel and Power, a very strong setup on the monthly scale, almost a consolidation breakout after 3.5, 4 months, about 950 levels. On the daily scale, yesterday it formed a kind of a small body candle, and today again we have seen some follow-up buy. So I think on the immediate basis, definitely we can see four-digit figure soon in this counter with support around 955 levels for an upside move towards 1,120 levels. Apart from that, one more counter that is there on radar is from the exchange theme itself. We see overall the chart structure of MCX. The bigger trend of the stock is very positive. And if you see the chart setup on the MCX, our range breakout was seen above 6,350, 6,400 levels. From last 3 to 4 days, we have seen good momentum, but overall, this counter will be a buy on dips counter. So any buying opportunity near around 6,300, 6,350 levels would be a good entry point for next positional setup. So overall, these two counters will be there on radar for immediate basis.
Okay. Metals and IT continue to be the top winners among sectors in trade today, over 1% each. FMCG seeing about 0.3% higher, and the Nifty just holding up flat. But the rest of the sectors have all slipped, with real estate now down 0.6%. You also have financial services, consumer durables slightly under pressure. Banks also coming under pressure slightly as well. Let's look at any other names that we can spot for our guests to really talk about. Restaurant Brands Asia, that's up sharply higher in the broader market, 7% higher in trade. You have HLE Glass Court, 20% circuit coming in for that one. We've seen how Pfizer has moved, Borosil is up in trade. Then, names like BASF India, that's up 7%. Supreme Petrochem, that's another one that's up by about 7% odd. HCL Infosystems, Reddington, we marked out for our viewers. These are some of the names that are holding up in otherwise, volatile set of the market as well. Dharmesh ji, apart from the sectors that we have discussed, is there any fresh sector or a theme that's coming onto your radar, sir, now?
I mean, theme-wise, again, the themes are same only because they have been doing well. But one new stock which has come into the radar is Wari Energies. The numbers were excellent when they reported their numbers. And they are the largest solar PV module producer in India. Almost 44% of the exports are from India is taken care of by them. India itself, 21% consumption is taken care of by them. And the capacity expansion has been humongous from 2 gigawatt to 13.2 gigawatt that they have done. And if you look at the profitability from in FY21, they reported 50 crores of a net profit, which has gone to 1928 crores in FY25. So this trajectory is likely to continue. I mean, 40 to 50% kind of a CAGR we are expecting for this profitability next 2 to 3 years. And based on that, with improving margins and ROEs, we expect this company to do fairly well. I mean, from 1 year's perspective, 3,600 is the target price, but it's a buy and hold for our model portfolio, so we'll be holding that and re-rating whenever the re-rating is required.
Okay, got that. So that's the view that's coming in. Let me get across to Arpit now. Arpit, especially on the oil and gas space, especially names like Petronet, LNG, GAIL, how are you placed at this point in time? There are some brokerage houses reports after the earnings. Earnings have been strong, but we have seen some underperformance continue in terms of the volumes and the regulatory hurdles of late. How would you look at the oil and gas basket right now?
Sakshi, if we see overall the energy index as a whole has been relatively underperformed for last couple of
Yeah.
weeks. So in spite you have seen good rally in the indices and the broader market, this sector has relatively underperformed. So if you look at the chart setup of GAIL, Petronet, and likewise, all or more or less all the counters are stuck in a range. But if we see overall from the monthly side and from weekly setup wise, a base formation has been created. So just waiting for some trigger wise on the price action wise. So within that also, if you look at the chart setup of GAIL, that relatively looks promising. So though right now it's consolidating between 183 to 192 levels, but good part is that it is holding at higher levels. And I think a closing above 190 to 193 will definitely give a follow-up momentum towards 195, 198. But as of now, there is no major momentum. So better to shift to the sectors which which have been in flavor and which have been momentum. And when you get this some action in this sector, we can go out for within this space.
Got that. What is also joined the list of top movers? Kaplan Point 7.5% high, NLC India about 7% up in trade. These are some of the stocks that are buzzing. I'm just marking it out for all our viewers to really see where the buzz is getting created. But Dharmesh ji, before we let you go, any key fresh stocks that have come onto your radar where you may have probably added positions, asked your clients to build positions at the current levels in the last 1 week or so?
Yeah, I mean, after avoiding automobile space for almost a year, we initiated a buy on, I mean, two-wheeler space, both Hero MotoCorp and Bajaj Auto. Though they have moved a lot in last 1 week or so, but still I think it's just the beginning of the move. And the
Okay.
factors are same, increasing disposable income, lower interest rate, better monsoons, marriage season and all. I do think 20 to 25% kind of an upside from here till Diwali is very much on the cards for both the companies. So that is one space which we have been avoiding for quite some time, and we have started re-looking and initiated a buy on both of them.
Okay, got that. Well, we'll thank you, Dharmesh, on that note for being
Thank
with
you so
us on
much.
the show. Always a pleasure to speak to you and get all your insights. Have a good day, sir, and we'll see you back soon on another edition of Market
Good day,
Today.
Sakshi.
Thank you. Arpit, we'll continue the conversation with you since we've been talking about the auto space. Yesterday, there was a very strong bout of momentum that Dharmesh did mention about Bajaj Auto, Hero Moto, even Eicher Motors for that instance. Technically also, do you think, that the move is warranting an upside and therefore one can probably catch on to the momentum yet again?
Sakshi, if we see interestingly, overall auto space, till this series it was an underperforming sector, but last few days has been a very sharp up move rally across all the two-wheeler space and the passenger vehicles space. We're talking about particularly all the two-wheeler space, that is the Bajaj Auto, Hero and Eicher. So from the chart setup wise, Hero Motocorp was one of our top pick that we were saying where a very good risk reward was available at the lower levels. In spite now in last 7 to 8 sessions, we have seen good rally of almost 10 to 12%. So I think from a medium term perspective, the base formation has been done on these counters. But from the immediate basis, as we are seeing some cool off from the higher levels, but it would be a more of a buy on dip counter. And within the auto pack, Hero Motocorp would be a preferred pick within the two-wheeler space. So if you see the chart setup wise, major breakout was seen around 4,000 levels, and immediate basis 4,200 is the support zone. So I think any dip towards that level would be a good buying opportunity, and slowly steadily the counter can head towards 4,500 4,600 levels. Apart from that, one more counter that looks positionally positive, that is Tata Motors. So this counter was under downtrend for last almost 7 to 8 months, and post that in the previous series you've seen a negation of lower highs on the monthly scale above 680 levels, and slowly steadily the stock can head towards 770 800 levels in next 1 to 2 months frame. So I think Tata Motor, Hero Motocorp looks promising from the low risk setup, as both have formed a strong base formation, and slowly steadily the stock can head towards 800 levels going forward.
Got that. So we'll keep an eye out on these auto names, Tata Motors, Hero Moto. Definitely we'll focus on that front. Let me bring in Pfizer for you. A very strong move, 9.5% higher. This was right after the earnings came in. EBITDA improved by 20%. Margins came in higher at 38.4%, and therefore you do see a 9.5% uptick on the stock post the earnings. Is this momentum going to build on? I think now it's up 11%, and it's already building on 4,970. How do you see the stock moving?
So generally, such counters have the momentum is quite erratic, and now if you see the setup wise, definitely a big up move, a good surge in volumes. If you see the chart setup wise, weekly a classical range breakout above 4,600 levels, and looking at the chart setup wise, it has managed to surpass its 200 DEMA after almost last after 3 to 4 months. So definitely the next leg of rally can be seen towards 5,200 levels. That would be a major hurdle zone. So there is still more up leg towards 5,200 levels. That would be a good exit point if the stock has been bought at lower levels. On the immediate range, support would be around 4,800 levels.
Okay, got that. I hope this has helped all our viewers to understand a tad bit what's happening there. We've not discussed banks. Let's discuss banks now, Arpit. In the kind of rally that we actually saw from the recent lows of 21,700, 21,800 all the way up to 25,000. A large part of the rally was supported by banks, especially the large cap private sector banks, even NBFCs for that matter. From the last one week or like a few sessions, we are seeing even the PSU banks step up tad bit. Some of the momentum is coming back here. How is your fresh approach going to be when it comes to deploying funds to either of the three segments, to large cap private banks, to PSU banks, or to NBFCs? How are you making that decision right now?
As rightly mentioned, if you see the recovery was mainly led by the financial pack as a whole, and this was a sector which was relatively outperforming in spite of the market turmoil that we have seen in last 6 months. So now coming out of the sector specific wise, we have been very much clear and selective in the approach wise from the banking space. So within that, we would like to go with the top bank, that is the ICICI Bank. So in spite of the market fall, that was the first counter to hit new life highs, and going forward also, so we can do a staggered way in three sections. That is within private bank, ICICI Bank would be a preferred pick. A very strong chart setup on all the time frames, monthly, weekly, daily. The base of the stock is shifting higher, so it's kind of a buy and dip counter. Any level towards 1420, 1430 levels would be a good fresh entry opportunity wise. Medium term perspective, 1500, 1520 is on the cards. From the private bank, we talk about ICICI Bank. From the NBFC, we would like to stick with the heavyweight, that is Bajaj Finance. So Bajaj Finance was one of a huge underperformer till the starting of this year, and since this year we have seen a range breakout above 8,500 levels, and slowly steadily the stock is moving higher. So from the NBFC space, we'd like to stick with the heavyweight, that is Bajaj Finance. And from here on, at least from 6 months to 1 year perspective, we are expecting a target towards 9,500 to 10,000 plus levels. So within the NBFC space, Bajaj Finance would be a preferred pick. Now the real challenge would be from the PSU banks, because generally these counters are relatively high beta, and relatively they have been be a movers moving quite sharply. So within that, two stocks would be on there, would be on radar. One would be Indian Bank. So Indian Bank, if you see the chart setup wise, in the entire last 12 months, the base of the stock is shifted higher from 400 to 500, and this counter is trading between 500 to 620 levels. In spite of so much market weakness, the stock is trading a life high territory, and I think definitely a fresh move or rally can be seen above 615 levels. So at the Indian Bank, from here on, we can see a good momentum towards 700, 750 levels. So that will be positional target from 3 to 4 months perspective. So I think to play out this theme, we have to stick to selective stocks within that space. ICICI Bank, Bajaj Finance, and Indian Bank would be a preferred pick going forward.
Okay, got that. That's as far as the banking names are concerned. Let me just mark out for all our viewers where the earnings reaction is coming in very, very positive today. You can actually see, Aries Life Sciences, that's up and about in trade today. Pfizer, we've already marked out for all our viewers with the kind of move that we are seeing there. NLC India, that's another one that's also doing very well. Restaurant Brands Asia, another one that's reacting positively to the earnings today. But wherever there is some decline, HEG you see some weakness. Then you also see some weakness coming in on Petronet LNG at this point in time. So that's as far as the earnings reactions are concerned. We also have BEL in focus post the earnings. Remember, JP Morgan has an overweight rating with a target price of 396, talking about how it was ahead of expectations, but you're seeing some profits being taken off on that table as well. So that's some of the moves that you're spotting in trades today. Let's look at one more space that's garnering some strength. FMCG, and I think this is largely to do with ITC kind of a move that's coming in. The stock is up by about 1% odd or so. FMCG, you also have Marico, Britannia, Dabur, Godrej Consumer Products. That's also something that you can keep an eye out on. Arpit, no considerable, probably decisive kind of a move that's backing up FMCG thus far. Even in the recovery that we saw, FMCG has hardly participated, and the participation has also been patchy. What would you do now? Do you think it has only very select stock opportunities here if one has to really have some FMCG stocks in the portfolio?
As rightly mentioned, since the bear market started in the year September 2024, so FMCG was one of the counter that are seeing the most hammering from the higher levels. And generally, it has said that it is a defensive sector, but this time the sector has a different story altogether. So if you can see, in spite of sharp recovery in the market, selective counters only have recovered with the FMCG pack, and apart from that, other counters have been still lackluster. So it would be a very selective stock specific approach within the entire FMCG pack. And if we see the chart setup of Marico, this counter has been a huge outperformer in the entire FMCG pack. And as we strongly believe that relative outperformance is very important, and going forward also we stick our bet within the FMCG pack to Marico. So Marico, if we see the chart setup wise, after trading at Li-Fi territory, some consolidation is seen at higher levels, but the support has been shifted higher around 680, 690 levels. So I think going forward also we can see a good move towards 750, 770 levels within the FMCG pack. So Marico would be a preferred pick. Apart from that, all other counters relatively has underperformed. So you have to be very much selective, and accordingly you have to play it out because the sector as a whole still now we have been seeing much more resilience. So better to wait and move to the sectors which have shown relatively outperformance.
Got that. We'll keep that in mind as well. Of course, the strategy that you've marked out for all our viewers there. Another stock that I wanted to bring up, where there has been extreme amount of retail focus, IRB Infra, post the earnings. The company has been one space where retail investors have parked in large amounts of money, and the stock has actually been consolidating, lagging for large part of the last 6 months or so. Now at around just 50 odd levels. The revenue uptick was seen at 4.3%, EBITDA improved by 12%, margins came in higher at 46.34%, net profit also improved by 13.7%. The quarter has been pretty steady in terms of the numbers that have been reported on a consolidated YOY numbers. But the kind of reflection that is missing on the stock price, what would you advise those who've been holding this stock at much higher levels from where they are currently?
So if I see from the bigger time frame structure, the stock isn't clearly downtrend, but that has been the texture of the market for a lot of the counters. So on the immediate basis, if we see on the daily scale, it has given a triple bottom breakout above 49 levels. However, if we see it on the immediate basis, 200 DEMA, that is around 51, 52 levels, that is finding some supply pressure. So from an immediate basis, the stock of the base of the stock is shifted higher. Immediate support is around 48 levels, whereas on the upside, 52, 53 hurdles is the major supply zone. From a positional perspective, medium term target would be around 53 levels. Any closing above 53 would change the setup of this counter towards 56, 58 levels. So I think from a long term, you have to closely watch out 54 levels. Any closing above 54 levels would change the structure from a medium to long term perspective. Till then, more or less the stock is likely to be in a range between 47, 48 to 53 levels.
Okay, got that. So that's as far as IRB Infra is concerned. Let's look at some of the other pockets in the markets then. In the Nifty Next 50 list, it's largely the real estate names like DLF that are pulling up 4% higher, 768 right now. Many others are also pulling up in trade. What's your call on DLF, Arpit? Any suggestion here?
So if we see chart setup wise, as overall reality was looking good, and definitely DLF come up with a good set of earnings result. And generally, if you see today, after making a sharp low towards 740 levels, it has rebounded sharply from lower levels. So chart wise, on the weekly scale wise, a classical range breakout above 720 levels, and we have already seen a move towards 760 levels. So chart setup wise, from a medium term perspective, the chart looks promising, but on the immediate basis, a good rally has been seen. So better to wait for some cool off near 735, 740 levels. That would be a good entry point with major support around 715 levels for an upside move towards 777 and then 800 levels.
Okay, and what about housing finance names? Is that something that you're looking at?
So if we see overall from the housing finance names, relatively very selective stocks have seen very good outperformance. And if we see relatively chart wise, generally the rally tends to fizzle out generally in the stock wise. So a couple of counters that are there on radar would be first would be LIC housing. If we see the chart setup wise, though it is trading in our band, we'll wait for some clarity on the chart setup wise, and then only we'll make a decisive move on this sector as a whole. Because so far this sector has been lackluster, and we are waiting for better opportunity because relatively good outperformance has been seen in sectors such as IT, auto, reality, and defense. So we'd like to stick with the sectors that are relatively outperforming, and we'll wait for some clarity before going for the next move.
Okay, got that. Another space that I wanted to discuss is the QSR space with you. Today there is Restaurant Brands Asia that has really shot up sharply, and this is after the earnings that have come in. Revenue has improved by 11.6% on a standalone YOY basis. EBITDA has improved by 36%, now coming in at 75 crores for the company. And we've seen margins now improve to 15.3%. Even the net loss for the company has reduced versus last year, same quarter. 31 crores was the last year's losses. This time it is down to 25.4%, and that's why you do see some reaction on the upside. So Restaurant Brands Asia, but you also have Sapphire Foods that's buzzing, Coffee Day Enterprises, Devyani International. These are also buzzing in trade. Any indication on how are you looking at the QSR space right now, and what remains to be your top focus?
If we see overall, this sector has been quite disintegrated. So within this sector, few stocks outperforming, whereas few stocks are in clearly in downtrend. So if I just look at the chart setup of selected counters, one counter that comes on our radar is Sapphire Foods. So last from almost many weeks, from last November 24 till now, the counter has been trading in a range between 300 on the downside, whereas on the upside 345 is the hurdle levels. So I think from a chart setup wise, definitely if we see a closing above 340, 342 levels on the Sapphire Foods, we can see a good up move of 7 to 8% towards 360, 380 levels. So Sapphire Foods would be there on radar for us. Closing above 342 will definitely trigger the next leg of momentum towards 370, 380 levels.
Okay, fair point. So that's the view that's coming in on the QSR space as well. Let's also look forward in the Nifty mid and small cap spaces. What is catching your attention in the broader markets? We have been seeing some pullback here also, but again, it's been not like a one-way move so far. Where are you keeping your focus in the mid and small caps? Are there some opportunities that you're spotting here?
I think going forward, definitely the monsoon theme will be an important factor to watch out for. And within that, if you see auto stocks also relatively like escorts. If you see escort, the chart structure wise, classical base formation we've seen on the monthly setup wise. On the daily scale, it is consolidating high levels, but definitely the stock has definitely more leg towards 3600, 3700 levels. So I think a dip towards 3450 would be a good entry point. That would be the counter that would be on radar for us. Slowly steady the stock can head towards 3600, 3700 levels. Along with that, as we already discussed, MCX, so MCX would be also a counter that have to be watch out for. Any dip towards 6300 would be a good entry point in this counter, and slowly steady the counter can head towards 6600, 6700. One thing that I would like to mention, as you've seen a very sharp rally in the last 1 week itself, so I think definitely we should wait for some dips in selective counters, and that would be a good entry point from a medium term to long term perspective.
Okay, fair point. We'll keep an eye out on that too. Let me also just highlight some more names in the broadest index that are pulling up. You have Harrison Malayalam that's up and about in trade today. You have Zensar Technologies that's up by 5.7%. You have also names like Terra Software that's up by 5% in trade. We marked out NLC and BASF. What's also moving in trade is some of the other names which I had marked out. Capstone Services, Alkali Metals, HLE, Glasscoat, that's up. Tatva Chintan Pharma Chemicals, that's up by about 5% in trade. Again, from the pharma related stories that continue. Are there any pharma related top bets that you'd like to mark for our viewers as well, Arpit? Pharma story, are you looking at maybe the likes of large caps like Sun Pharma, Dr. Reddy's or Cipla, or are you really going down the diagnostic space? We saw strong moves on Divis, earnings came in strong. How are you navigating through these fresh moves, and where are you keeping your focus?
So talking about pharma as a whole, the pharma as an index has been relatively strong uptrend. There have been some phases where we have seen downtick, but the bigger trend of the index is strong. And as we have highlighted, Divi's Lab was what counter that on our radar. For almost 6 months, the stock was consolidating between 5,600 to 6,300 levels. Finally, after the result, it has given a range breakout above 6,000 levels. 6,200 levels. So I think the base of the counter shifted higher, and positionally we can see a good move towards 7,000, 7,000 plus 100 levels in next 3 to 6 months perspective. So Divis Lab would be a top pick within the pharma pack from a medium term to long term positional investing.
Okay. One stock that I'd like to mark on the downside, whereas keep an eye out on the Nifty also. First half an hour candle is out, viewers, and we are seeing some pressure, 51 points lower in trade. We've slipped below 24,900 odd mark. Let me first quickly take a view on the Nifty, and then we'll move on to the next stock that I wanted to mark. On the Nifty, now you're seeing some profits being taken off after hitting that 25,000 mark last week. Your sense now, or what are you looking at? Any support levels that you would look at, key triggers?
So from a positional perspective, our overall bias is positive. Until Nifty holds about 24,800 levels, it would be a buy and dip stance. But having a look at the chart setup wise, definitely some cool off is seen from the higher levels. And generally, index tend to behave in that way. After a big up move, it consolidates to 2 to 3 days, and then we see in the next leg of rally. So now going forward till the expiry, our stance is that Nifty is likely to be a range between 24,800 to 25,100 levels. Until it holds above closing above 24,800, our stance would be positive. But having said that, we have to be very much stock specific, and where the movement has been already triggered. So over there, you have to be a little bit careful. But where the sectors are turning from the lower levels, we can watch out for. So overall, the bias is positive till Nifty holds about 24,800 levels.
Fair point. We'll keep that in mind. Protein eGov Technologies is something that I wanted to mark. Remember, viewers, there was a 20% lower circuit on this one yesterday. The stock has fallen another 13% in trade today. So it's down by 30% in, kind of 2 days of a move. Although we pulled up from the day's low point, but there has been still a sharp pressure. You can see the stock now hovering at 1,050 odd levels, 8% lower. Now, the news that came in yesterday was that the income tax department has not really looked at Protein eGov for the PAN 2 revamp, which includes design, development, implementation, operation and maintenance of the PAN systems. That led to a sharp fall on the stock. And remember, the 52-week low for the stock is 930, and we'll just have to see whether the stock is at the risk of hitting that one as well. But right now, if you look at the stock has fallen sharply here. Arpit, any suggestion on Protein eGov? Okay, got that. So I think there's some connection loss with Arpit, but we'll keep an eye out on this, with the kind of impact and the news flow that there is, even though the management has come out and said that they don't see too much of an impact, but the reaction on the stock has been pretty sharp, looking at a missed opportunity there when it comes to the revamp of the PAN 2 systems on that front. 24,900 with us in the first half an hour, 35 minutes of trade, 40 points lower is where the Nifty is. Most of the sectors are down, banks are lower, financial services are lower. Autos, we have broader markets, small caps and mid caps lower by about 2/10 and 0.3% each. We're looking at pharma, realty, PSU banks also lower, but it's the metals, IT that are continuing to hold up in trade. 1% higher for metals and IT about 0.9%. Oil and gas and FMCG, slight gains that can be seen on that front. On the Nifty, Tata Steel, Coal India, Infosys after that upgrade, brokerage house upgrade that has come in. Hindalco, ONGC, Grasim, JSW Steel and ITC. These are the top movers on the Nifty. Whereas on the downside, Eicher Motors that was up yesterday is seeing some cuts. Hero Motor that was up yesterday is seeing some cuts. Trent, HDFC Bank, Shriram Finance, these are all the stocks that are seeing some pressure build up. On the F&O space, DLF that continues to move up higher, 4.5% up. ICICI Lombard General Insurance, Coforge, Tata Steel, these are the top movers in the F&O front. On the downside, Titagarh Rail Systems, which was up and about yesterday with the kind of move that we were seeing on the railways, is seeing profits being taken off. Max Healthcare, PB Fintech is also down in trade. HFCL, that's another one that's seeing some pressure built up. So those are the kind of stocks that are in focus right now. We leave you at that, viewers. We're testing 24,900. Remains to be seen whether we see a pullback from this or we see some further pressure build up on the markets. Throughout the course of the day, markets coverage will continue. So do stay tuned with us. Of course, at 12 noon, we will be answering all your stock related queries on daily calls. So keep sending in all your queries on our WhatsApp number that keeps flashing on your screens, and you can keep joining in on our YouTube lives to ask those questions as well. Many thanks for tuning in. See you soon on the other side.
The situation along the line of control and the international border in Jammu remains extremely precarious. There is a no war, no peace situation. Operation Sindoor is still on, and you have